Let's get across today's markets with our business reporter, Ed Boyden. Ed, look, I've got to tell you, there were some great stories today, some great performances, but largely the tech stocks were smashed following on from what happened in the US overnight.
Thanks, Ross. Yes, it was a tough 24 hours for technology stocks, particularly in the United States, but also here in Australia. Overnight, PayPal shares suffered a record fall, down about 25%, after the global payments giant announced it had closed 4.5 million customer accounts. Shares in Meta, the new name for social networking platform Facebook, plunged about 23% in after-hours trading after it reported higher costs and weaker earnings. And shares in Spotify, they dropped in after-hours trading too. But tech stocks on the Aussie stock market were naturally weaker today as well. The ASX 200 closed down about 0.1% today. Some of the worst performers included WiseTech Global, Pro Medicus, Appen and PolyNovo. They all lost value caught up in the tech sell-off. Some of the best performers included pesticide maker Nufarm. That was the standout today after it reported a strong first quarter thanks to favourable weather conditions, and they just soared up about 20%. Also, the iron ore miners, they did pretty well too. That's just thanks to rising commodity prices. We've got the majors there on the screen. Aussie dollar was slightly weaker today. It's currently buying about 71.23 US cents. And today, Ross, we've had a big profit update here from Nick Scali Furniture, one of the first profit updates of the new reporting season.
And it's a bit of a litmus test in some ways, Ed, because one of the things about Nick Scali Furniture is they're really all about one of those situations whereby you can see right now that it's about consumer demand, it's about interest rates, it's about housing prices, the whole lot. So, that's where it's profit today. It came out half-year profit, 35.6 million. That was down 6.6%. But the sales, the revenues rose 5%, $180 million. So, as I say, this is pretty good. The shares didn't fall. The market took this in its stride. I think that was pretty important.
Yeah, Ross, the shares lifted today, and I think one of the main things that the market was looking at and they liked about their results was the orders, the customer orders that Nick Scali have at the moment. It's 70% higher now than it was at this point a year ago. So there's a lot of demand here for furniture. People want to buy it. They just can't get their hands on it right now due to the supply constraints.
All right, so the other one that came out, quarterly results from Westpac today. We might analyse this in a little moment, but again, this was better than the market expected. The share price of Westpac was higher today, up by around 2%. So it again goes to show that if companies come out with the right results at the right time, the markets will reward them still.
This is going to be the trend that we're going to see, I think, over the next course of this next profit reporting season, over the next couple of weeks. Like companies that can come out and say they're going to do something and actually achieve it are going to do well. Ones that report these problems with the supply chain and don't really have a way to fix the issues are going to get smashed.
Yeah, and yet, interestingly enough, those tech stocks that you mentioned there, they all got hammered. And in many cases, it was not because their results were poor. In fact, they were stellar in some cases. It was just that outlook that disappointed. And that's got to be a trend that comes here to Australia as well.
Exactly, and that tech sell-off's even affected some of the big Aussie-listed fund managers like Magellan. Its shares were down about 6% today as well because it has a large holding in Meta, which plunged about 23% overnight.
OK, so that's going to be one of the interesting parts about it, and we'll watch that closely.